Let's get across the market open now. Riaz joining us from Banyantree Investment Management. Zach, welcome to Tuesday to begin a shortened week, of course. Plenty to consider for an investor at the moment. We're heading into some key earnings results out of the US ahead of our own earnings season, which starts next week. But then, of course, you've got those ongoing geopolitical tensions, and you only have to look at how gold is performing off the back of that risk.
Yeah, good morning, Andrew. Plenty happening. With Australia Day past us, I think that's the official end of all hopes of a holiday period. And so everyone will be returning, and we're returning into plenty of data points. So obviously the big tech overseas, globally, you start to get the big tech to report the results, and we'll be looking for the CapEx, the return on CapEx, and all of the AI developments that the investors are stressing over. And so that will be key for the market. And then obviously we head into the Australian reporting season. We've started to see some updates from few of the stocks already, few of the companies already, but it's a very busy period. And look, we'll be very much focused on earnings. I think we're in a bit of a holding pattern. But like you mentioned, the geopolitical landscape is just, the noise out there is very, very elevated. We don't think that's going anywhere. We think Iran is still an issue that's going to rear its head very soon. As per our expectations heading into this year, first half, there's just too many headwinds for the markets to get a clear run. The Fed issues still needs to be solved. Obviously earnings, and then we want to see GDP numbers, very strong GDP numbers coming out of the US already. If you look at the Fed Atlanta numbers, and then I think what we really want to get a bit of an appreciation for is where some of the labour market numbers are starting to rest. We had the Australian labour market numbers, which were pretty strong. Unemployment fell down. So there's a lot going on, but yeah, we feel like there's going to be a little by way of clean room to run for risk assets. And so we don't think, long story short, we don't think right now is buy the dip. If you are going to buy the dip, we'd be very selective. I think there's going to be a better opportunity in the next 3 months or so.
All right, so if you're looking for those opportunities, where are you looking?
Yeah, look, globally, just very quickly, globally, we reckon cybersecurity looks really good. It's very interesting, if my memory serves me right, or if I've read the headline correctly, some of the European countries have said overnight or recent days that if Russia attacks us from a cybersecurity perspective, or hacking perspective, we're going to do the same. And that's a bit of a shift, I think, in people's expectations of what sovereigns have traditionally said in the past around cybersecurity and hacking each other. It may be already happening, but I think the openness of admitting that is quite stark. And so I think cybersecurity stocks have come off a little bit. I think they look very interesting, defense play. But in Australia, just within the mid-cap space, there are some stocks that have come off a fair bit of derating, even within the tech sector. You would have seen, I think, late last week, Life360 came out with results which slightly better than expectation. To be honest, the results were slightly better than expectations. There were slightly, probably some upgrades to earnings, but the stock jumped up 25% or whatever it was, and that's because it's obviously fallen a fair bit. But we're looking at that mid-cap space sector where things have just moved away way too much, and potentially as we get earnings update during the February reporting season, we may get some positive surprises, or surprises not as bad as market expects. So that's where we're looking right now.
Well, let's get a little more specific, particularly as we head into reporting season then, Zach, and those companies on your watch list and why.
Yeah, so I think there's a couple of would call out. We've spoken about Lovisa. Lovisa's had a fair retraction or derating, and it came out with some numbers which was slightly below expectation, and that's to be expected. It was trading at a high multiple, but I think the growth story for this stock is pretty strong still, especially the offshore. what another interesting part, well, I think is an attractive part of this Lovisa is it's not a big ticket item, Andrew. It's, you're not spending $100, $200 on a piece of clothing or a premium product. These are, small, efficient shops which are selling jewelries to, teenagers, predominantly in my understanding, and that, the impact from potential macroeconomic issues is not a major one from our perspective. That's one that we like. We also like Pexa Group. Pexa Group is one that, again, high quality stock. You would have noticed that last year quality factor really lagged, and as people moved into cyclicals and more into materials sector. But quality is still quality, and so we believe quality will start to make a bit of a comeback, especially if we start to get more volatility and more uncertainty in the global landscape above what we already have. But if you look at Pexa, the Australian business is strong. That's not where the key growth in earnings are going to come from. It's obviously offshore, which is obviously, their penetration of T1 lenders in the UK. They're already off with National West, and that they will start to pump volumes, onboard volumes in early 2026 this year. If they can announce a few more T1 deals, and that would be a really good positive for Pexa. And so that's one that we also like. Within the mid-cap quality space, and then there's also stocks like Breville. Again, stocks. Breville's come off a fair bit. Again, there's been issues around consumers and consumer-facing stocks and concerns around that. And so incidentally, you've got the Bitcoin. We think Bitcoin looks pretty good at these levels as well. But I'll come back to Breville. Breville's still got a very good tailwinds around its earnings around this short to medium term. In our view, the replacement cycles of coffee machines, product innovation, and then also, the expansion into UK and US, so there's some really interesting tailwinds for this company from a growth perspective. The other point about Breville, and something you probably want to look out for more broadly when you're looking at the the earnings season, is I think maybe tariffs impact start to just sort of moderate, or there's no new news on the tariff impact, and so I think stocks like Breville, who have been impacted by the sentiment around tariffs and whatnot, some of that may start to become less of a headwind. So they're some of the names that we're looking across in the Australian landscape.
All right. We did have that chart up for Bitcoin. While we're there, what are you thinking? Because it has come off. I guess it's sort of that inverse relationship we're seeing with gold at the moment.
100%. And so look, exactly. There's an inverse relationship there, and traditionally it's been sold as, well, it should have similar relationship to gold because people buy Bitcoin for the same reason. And no, we don't propose to be some significant experts in Bitcoin or cryptocurrency, but we do follow the space, and what we do like about how we see it is as a risk asset, and so when risk and liquidity starts to come back into the market, we look across all liquid assets, higher risk assets, and from that perspective, Bitcoin falls into that. But to your point about gold, if you look at the gold Bitcoin ratio, we're getting to that space again. We're getting to that region where Bitcoin starts to look more attractive than gold. We would not be, liquidators of gold here. We would continue to take profits. It's been an investment that we've been thumping the table on for 3-4 years now. But what we do think, we're looking for opportunities, and I think we're getting to a point where Bitcoin, even for those speculators and even long-term investors, it's not a bad idea if you want some risk in your portfolio. And so, we would be happy to take a very small position in Bitcoin for those with that risk profile and ability to take that risk. So Bitcoin is starting to look very interesting to us, to the point we'd be happy to take a very small position in it.